In today's video, I want to talk a little bit about the manipulation of the metals market. I know for a long time, before 2013, I was not really um, convinced that the metals market was being systematically manipulated. But after 2013, that's when we started seeing these huge pre-market contract dumps, something that obviously wouldn't occur naturally. And it's been my contention for years now that um, once the SEC banned short selling in the financials back in 2008, that was the end of free markets as we had known them. And from that point on, it became basically fair game for the banks to make money any way they could. And one way to do that, obviously, was to manipulate the metals market. The regulations are that you can't trade more than 3,000 contracts in the futures market on gold, but this is regularly ignored, and the authorities don't enforce that rule for the banks. So that's why we often see these 10, 15, I've even seen 25,000 contracts dumped on the metals futures market in a very short period of time, 5 minutes or less, almost always in the pre-market where there's little volume, and that kind of or that size trade will collapse price. And what they're trying to do is they're trying to break a support zone and then get further selling to push the price down. So, this has worked really good for the banks for years and years. They've made a lot of money manipulating the gold market on the short side. That way they can trigger a panic selling event. They can cover their shorts into that panic, and then they can get long right at the bottom ahead of the next intermediate rally. And as long as the authorities aren't going to enforce the rules, then that's been a strategy that has worked really good, and the banks have made billions of dollars off of being able to manipulate the metals market. However, it does open the possibility for a very profitable contrarian trade against the banks. And by that I mean if the bulls can trap the banks into a large short position and prevent them from creating that panic selling event, then the banks can't get out of their short position and they get caught in a short squeeze. I'm pretty sure that's what happened right here during the correction back in the summer. I had notified my subscribers as this was happening. We were seeing the usual large contract dumps in the pre-market to take price down. But then something happened that had really never happened over the last 6-7 years, and that there was a buyer that kept defending against those attacks. So once the contract dump was done, instead of triggering a stop run and a severe sell-off where the banks could cover their short position, a buyer came in and pushed price back up. That forced the banks to attack again and increase their short position even larger. And again, buyers came in and defended against the attack, pushed price back up, and then we get a third attack. Again, that one fails as well. And then the buyers push price up to where, in this case anyway, it made a higher high. Gold made a higher high. That was the signal to any institutional trader that the trend had changed. We're looking at a pattern of higher lows and higher highs. So that brought in organic buying, and at that point the banks were trapped, and they were going to have to cover that huge short position they had built up into a rising market, and that is what drove this very strong trending move. Um, Now, I think the same thing is happening here. We clearly had major attacks, some of the largest that I have ever seen. I think there was a day where there was 26,000 contracts dumped on the market, and obviously the goal was to break this support zone right here, this pivot, and try and manufacture a panic sell-off. Um, and then the banks could cover their shorts into that into that panic, and then start to get long uh, for the next intermediate rally. But it didn't work. You can see here there was no follow through on the downside, and I watched the intraday charts as the buyers came in and defended against these attacks, and then more attacks a couple of weeks ago, and granted, Friday was a low volume, post-holiday trading section, so I'm taking this with a grain of salt. But it looks to me like um, the bulls are trying to set the banks up again and catch them in another short squeeze. If they can, it's going to be worth a lot of money, just like this move here was. If they can trigger a short squeeze, uh, call options will pay off very handsomely during a strong trending move. So I'm watching the metals very closely here. This sideways chop uh, uh, is not worrisome to me. This is what has to happen in order for the banks to get basically suckered into um, building larger and larger shorts. Again, they want to try and break this pivot here, and now, of course, they want to try and break this pivot, create a panic sell-off, and then cover the shorts low, and then turn around and get long. But if the panic sell-off is prevented from occurring, then the banks are going to get trapped with this huge short position, and they're going to have to cover into a rising market, which is going to power another very strong trending move. So while I'm watching a lot of novice and emotional retail traders get frustrated because this gold is just not going anywhere. They want gold to go up. They want it to go up immediately, go up strongly. And it's not doing that, but it is doing what it needs to do to potentially catch the banks in another um, short squeeze, and that has the potential to produce some very um, nice and strong gains over a short period of time, just like this short squeeze here produced this move. So the only question is at this point is if the bulls can trigger that short squeeze. And I'm going to say, for me anyway, I'm watching this level here at 1480, 1485. This is a major support and resistance zone. Um, if the bulls can close gold above, let's call it 1485, 1490, then I think the bank's position becomes hopeless, and they're going to be stuck in another short squeeze. And they're going to have to cover that massive short position into a rising market, which is going to produce another very powerful, very aggressive uh, trending move, very similar to this one.